So everyone, right here we have all the the main candlestick patterns that will make you money, that will show a bullish surge or a bearish drop. So the first one we have here is a dragonfly doji. So you're going to see the preceding downtrend, and then all of a sudden you're going to see this coming up. Little to no real body. As you can see, it's just a doji. Little to no upper shadow because it's all down, meaning it went up as opposed to going down, which would be the opposite. Long lower shadow, as you can see here, that's upward pressure. And so wait for the candle to close above the high of Dragonfly Doji. Buy upon confirmation. Set stop loss below the low of Dragonfly Doji. And then set profit target at least 2 times of stop loss. And that is the Dragonfly Doji. Memorize these patterns so that you can make some money. Then we got the hammer. As you can see, it kind of looks like a hammer, like something you would wield with your hand. So it has a preceding downtrend. That means it was at a downtrend, and all of a sudden this thing popped up. Little to no upper shadow, and then lower shadow rather, at least 2 times longer than real body. So as you can see, that line below the body, it's at least 2 times longer. So it's not going to be exactly like this all the time, but it's going to be, just follow these rules. And then you wait for the next candle to close above the high of the hammer. That's a big one. You have to make sure the next candle closes. Closes, not just appear. Buy upon confirmation. Set stop loss below the low of the hammer, so that you have a barrier for price to get to in order to trigger your stop loss. You want to make it hard for the price to knock you out of the market, but you want to make it easy for price to hit your target profits, your profit targets. So you have to keep aware of that. And then so you're going to set stop loss below the low of the hammer. Set to profit target at least 2 times a stop loss. Of course, you're going to look at levels. So you're going to set your target profit below the resistance so it makes it easy. And then you want to set your, you got the idea here. So we got bullish engulfing. As you can see here, so you had a downtrend. All of a sudden, we got this bullish engulfing coming on here. The first candle is red. The one here looks a little bit green. And then second candle green. First candle shorter, second candle longer. First candle entirely contained in the body of second candle. So you wait for the next candle to close above the high of second candle. Buy upon confirmation, set stop loss, and then, go to town basically. So we got the piercing. So we're going to, a preceding downtrend, and all of a sudden we have a piercing. First candle is red, okay? Still above it. Second candle green. And then second candle open below at closing of first. So you can see here it's above the closing of the red candle, which is the first one. And then the second candle closed at 50% or more of real body. So wait for the next candle to close above the high of second candle. So if a candle close above that high there of the second candle, Buy upon confirmation, set stop loss, and then target profit. Boom. And what do we got here? A tweezer bottom. Got to memorize these patterns. So you got a preceding downtrend. First red candle. First candle's red. Second candle green. Both candles sharing the almost same low. It's like almost twins, basically. So you wait for the next candle to close above the high of both candles. Buy upon confirmation. It's very simple stuff once you get the hang of it. So you need to know these patterns plus support and resistance, supply and demand, and then you'll be set. That's all you need to know. It's really simple. So you got the 3 white soldiers. So you got a preceding downtrend. 3 consecutive long green candles. Each candle closed successively higher. So wait for the next candle to close above the high of the third candle. And then buy upon confirmation, set stop loss, and all that good stuff. And then the final one on the bullish side is the morning star. So preceding downtrend, first candle red and long, second candle body is tiny. It's a rejection, actually. That's what that second candle refers to. It's going down, and then all of a sudden there's a rejection. And then all of a sudden we have this big green candle coming out here. Third green candle closed at 50% or more real body of the first. And then so this may not be a valid morning star. You got to be, make sure. But, you just get in there if it looks good to you and see what happens. Otherwise, you get stopped out if it's not the case. So make sure it is. And then we'll just go really quick through the bearish. It's the same. It's just the opposite. We got the gravestone doji. It's the opposite of the dragonfly. You have the shooting star, which is the opposite of the hammer. You have the bearish engulfing, which is the opposite of the bullish engulfing. You have the dark cloud cover, which is the opposite of the piercing. Then you have the tweezer tops, opposite of the tweezer bottoms. Then you have the 3 black crows, opposite of the 3 white soldiers. Then you have the evening star, opposing the morning star. It's really that simple. So these are the main patterns. There's more as well, but these are the main ones that will make you money if you use them correctly. Maybe we'll go over some examples in the future. But that is it now. Please like and subscribe if you like this little bit of tutorial here of basic concepts. But really, the basic concepts are the ones that will make you money. That's all you need to know. So, thank you for watching.